have with us Nitin Panwad now, Group CFO at Vaibhav Global, joining us. Blockbuster numbers, of course, which were declared a couple of days back, but plenty of other moving parts as well, Nitin. Firstly, talk to us about what drove the kind of numbers that played out. Was it purely seasonality? Was it some pent-up demand? Because the numbers were extremely strong. And in fact, what really surprised me was the kind of margin uptick. So give us a sense of what's played out both on top line and margins first off.
Yeah, and good morning to you and your viewers, and thanks for having me. Yeah, so past quarter, pretty pleased with the performance that we have. First time we have crossed 1,000 crore mark in a quarter, and 1,060 crores to be precise, 9% growth, 40% PAT growth that we have. Pretty pleased. Partly it is driven by in the US, despite all the consumer confidence down or the economic uncertainties, whatever we have, but we navigated well with the newness of the products, innovation in the products, and our digital platform keep on improving year over year. That is driving the growth. Despite the major tariff challenges that we have, we navigated through our manufacturing and casting process started in America. That is helping us to navigate the tariffs. And we have seen the 400 basis point cost increment of our products, but still we managed to increase our gross margin by 30 basis point in US. And manufacturing in US is helping us to give a better price to the consumer, and consumer is accepting pretty well with that. So pretty pleased with the performance, with the especially in the current very dynamic environment what we are seeing right now.
Interesting to hear that. But tell me, 11% of your B2C revenues, Nitin, that actually is coming in from the European geography. Wanted to understand what kind of benefit do you expect to enjoy from India EU FTA, which has now been signed?
Sure. Actually, it's a very positive change after a long time that has been done. With the pretty good deal that, especially in our sector, though the duty amount was not significant, but was still, there's a 4% duty early was applicable. That will be no longer in maybe a year time. And especially our Europe market is Germany and Austria, and which is growing quite well for us in past 4 years. And that will definitely benefit from the deal. It is not a right time to say, to be precise, how much it will be impact, but those kind of changes always welcome. Entry barriers are removed, and easy market access, especially for Indian exporters, for competitiveness in terms of pricing compared to other countries, it will help. But having said that, we have a vertical integrated supply chain, not only in India we manufacture, but also in other Asian countries. So we have a power of managing the pricing or better sourcing facility if those kind of changes happens across the world.
But Nitin, give us a sense. You say that you do source some of your product from outside of India as well. Does the supply chain now change given the India-EU FTA?
Yeah, so the other countries like the other Asian countries, China or Bangkok or other countries is having their own specialty. We navigate based on the pricing and product quality or product niche, what the other country operates. If that India is having a zero duty while the other country is having, then we'll start more production in India to fulfill that. Apart from that also that we also fulfill very small amount of manufacturing for other third parties as well. And they might come to us for a production also that will improve our B2B business also, if that comes in a picture.
So could we draw it down to the US in particular about what it's going to spell in terms of numbers? Because since 59% of your B2C revenue comes from the US, tell me, how much of that has impacted the account so far because of the tariffs in India? And as and when the deal between India and US is signed, do you expect US sales to rebound meaningfully?
US, throughout this year, the tariff was the main hurdle from 10% to 25 to now 50% tariff. But because of the very pretty agile business model we have, we managed to start operation a casting manufacturing facility in US. We still have an increase in our COGS, roughly around 480 basis points, but that we managed to pass on to the consumer. And despite that, we managed to increase our gross margin apart from that. So tariff is navigated through the manufacturing in US. We have to pay only just tariff on the value addition part that we do in India. The rest of the part, there's a no tariff for us. So that is successfully been done so far. But the economy perspective that we have seen some quarters back, some numbers that consumer confidence were down, but the VR model is a low price point model where the price point is roughly around average ticket size $30 to $40, where those kind of things doesn't impact much because consumer is a very discretionary and fast fashion item we offer to the consumer. So that is helping us compared to the high price point competitors who operates these increment in pricing is affect them more rather than us.
And from a competitiveness standpoint, therefore, post this entire new tariff getting levied and now relatively more stability, if I can call it, with regard to even the tariff regime, are you better placed in terms of your competition, your peers who are also selling in the US? Give us a sense of that.
Yeah, most certainly. Actually, that we source from 30 countries across the world, and we follow that offer the best price to the consumer. Because of that, over last 40 years that we have built these kind of sourcing facilities. So that is actually helping us to offer better price to the consumer and better sourcing for us and increase our gross margin. We operate at above 60% gross margins and best product to the consumer in terms of quality, in terms of production to them. So those kind of things all in all helping us compare to the competition who depends upon some supplier or some countries. So we got an edge on compared to them in terms of our sourcing facilities and manufacturing.
Good to hear that, Nitin, and thank you so much for your time today. Good to be speaking with you.
Thank you.
Let me just revisit what the equity markets have settled in at. It was definitely a bit of a